Why is researching disruptive technology key for investors? Have you ever wondered why some technologies seem to take over the world while others fade away? Researching disruptive technology is essential for investors because these innovations can completely change industries and create new markets. This means there are opportunities for high returns if you know where to look. Disruptive technologies introduce new ways of doing things that can replace older products or services. This can make established companies less relevant or even obsolete. Understanding which technologies have the potential to disrupt markets allows investors to spot promising companies early. For example, think about artificial intelligence, smartphones, blockchain, three-dimensional printing, and ride-sharing applications. These technologies often start by serving overlooked or new markets and then grow to challenge or replace existing market leaders. Researching these technologies helps investors in several ways. First, it allows them to spot growth opportunities. Disruptive technologies often lead to new products or services that attract many customers. This creates potential for companies to grow rapidly. Second, it helps investors avoid risks. Established companies that fail to adapt to disruptive technologies may lose market share or go out of business. Investors who understand this can avoid losses by steering clear of companies at risk of being displaced. Third, knowing how disruptive technologies change consumer behavior and industry practices helps investors predict which sectors will expand or shrink. This understanding is key to making informed decisions. Research also allows investors to evaluate whether a company's technology is truly innovative and likely to succeed. This is important because not every new technology will take off. Some may just be passing trends. From an economics perspective, markets and businesses are always changing because of new inventions. Some inventions are small improvements, but disruptive technologies cause big changes that affect jobs, prices, and what products people want. Investors who learn about these changes can make smarter choices about where to put their money to build wealth over time. In practical terms, researching disruptive technology means looking at how a technology works, which industries it affects, how customers respond, and whether the company using it can compete well. For instance, early investors in smartphone companies or artificial intelligence startups benefited because these technologies transformed how people communicate and work. Researching disruptive technology is key for investors because it helps them find companies that could grow quickly, avoid those that might fail, and understand how the economy is changing due to innovation. This knowledge supports better investment strategies and wealth building.